Welcome to Commercial Real Estate Pro Network's CRE PN Radio. Thanks for joining us. My name is Jay Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today, my guest is Anthony Coniglio. Anthony is the President and Chief Investment Officer of New Lake Capital Partners. New Lake is the leading provider of real estate capital to state licensed cannabis operators through sale leaseback transactions and third-party purchases, as well as funding for build-to-suit projects. New Lake owns a geographically diversified portfolio consisting of 27 properties across 10 states with 8 tenants. And in just a minute, we're going to speak with Anthony about the cannabis business and the opportunities to invest in real estate with cannabis tenants. But first, a quick reminder: if you like our show, CRE PN Radio, there are a couple of ways you can help us. You can like, share, and subscribe. And as always, we would love to hear from you if you want to leave a comment. Also, if you'd like to see how handsome our guests are, normally you can check out our YouTube channel and see us there. And the YouTube channel is Commercial Real Estate Pro Network. While you're there, we would love for you to subscribe. Unfortunately, today you may see a picture of Anthony, depending on how the edit goes. We have a little bit of technical challenges. But nonetheless, we have Anthony on the line, and I'm really looking forward to talking with him. So without any further ado, I'd like to welcome Anthony. Welcome to CRE PN Radio.
Thank you, Darren. I'm excited to be here. And I apologize that we can't get the video going today, but I think we're going to have a fun conversation.
No, I'm certain of that. Before we get going, if you could take just a minute and share with the listeners a little bit about your background.
Sure. My background, I've been in business for over 30 years. I started my career at Price Waterhouse, auditing banks and asset managers and real estate firms. I had a number of stops at CIBC and JP Morgan in and around investment banking for a big part of my career. I started a residential mortgage company in 2011 after I left JP Morgan. And we took that business and scaled it up nationally, and we sold it to a portfolio company of Blackstone. Then I found myself in 2018 trying to figure out, what do I want to be when I grow up? Having 20 years of experience, well, at that time, close to 30 years of experience. And a friend of mine who's been a very successful entrepreneur said, who runs a REIT, he runs a multifamily REIT, and inside that multifamily REIT, they have a small, it's actually fairly sizable now, lending business, bridge lending business. They had been seeing significant demand from cannabis companies in the 2017, early 18 period. And when he heard that I had sold the business I was running, he said, my gosh, we've got an opportunity to start up a new REIT that's focused exclusively on the cannabis sector. And that started this whole dialogue around cannabis real estate investing.
Awesome. So being a financial guy, I'm assuming the numbers and the way the numbers work and all that's probably secondhand to you as far as the ability to see something and recognize the opportunity there.
Yes. As a banker at JP Morgan, I ran specialty finance investment banking. We had a number of fintech companies that would fall under our purview. And so especially coming out of the financial crisis and seeing some of the dynamics that play, say, with the mortgage business, when we looked at cannabis real estate, and I looked specifically at the opportunity, there were some real value catalysts that were very apparent to us back in that late 2018 conversation.
Yeah. So New Lake, are you guys a REIT then? Is that how you're set up?
Yes, we are an equity REIT.
Okay. And for the listeners, if you could define that and tell us what that is.
Right. We are an equity REIT where we purchase properties that are used exclusively in the cannabis sector. We acquire retail and industrial properties. We execute transactions with fully built and operational facilities, as well as facilities that are under construction and even some build to suits. We have a couple of transactions where we've executed where they've been ground up construction that we've been able to fund. Today, we own 27 properties across 10 states with 8 tenants. We have some of the leading cannabis companies in the cannabis industry as our tenants, some of the best credits in the industry, names like Curaleaf and Cresco and Trulieve, just to name a few. And we're very proud of our track record. We've been at this for almost 3 years, and we have not had a deferral or an abatement. No issues, knock wood, in our portfolio since inception. We're very proud of that track record because investing in the cannabis sector is difficult. This industry has a lot of ups and downs, and it has had a lot of companies that have fallen under financial distress.
No, definitely the cannabis definitely has some interesting challenges just based on the legal climate. I'm curious. So you guys, you own the property and then you lease to the cannabis business. What drives it? Is it you have a client as a tenant that needs space, or do you find the space and then look for the tenant and offer that up to your current list of tenants?
We don't actually work to buy properties and entitle them. The properties at this point in the cycle, the tenants secure the properties, and typically in the limited license jurisdictions that we focus on, these are jurisdictions where the license and the property are attached in either explicit or implicit forms. Think about a state where you would not be able to purchase liquor at a supermarket. And so I'm sitting in Connecticut today, whether it's many states in the Northeast, you have to purchase wine or beer or liquor, wine or liquor at a liquor store. So in those limited license states, there's attachment. And what that means is that the operator needs to identify, in most cases, where their business will be located when they go in and they apply for the license itself. So it's part of that licensing effort. And so they've secured the location, they get it entitled, they get it licensed by the state, and then they'll look for a partner like us to come in and provide that acquisition capital or the tenant improvement dollars to improve the properties. Just to give you a little bit more flavor for our transactions, these are long-term triple net lease transactions. They tend to be 15 to 20 years on the industrial properties, call them 12 to 15 years on the retail properties. And it's all triple net where the tenant continues to maintain the responsibility for the property. No disruption, as your listeners probably know, no disruption to their operations. So it's a really attractive way for cannabis companies to raise capital in a non-dilutive manner.
Right. No, and it makes sense. Like you mentioned, just the licensing and the, zoning and or where a cannabis business is licensed, that being established first, and then you as the essentially the financing equity stakeholder, and then the tenant is the operator, and the tenant triple net lease. That I love the way that all fits together, because I know just in Oregon where I'm located, we've got lots and lots of cannabis businesses, but I know it's been a challenge based on the getting the space located and licensed, and then even with that, then you go with the lenders. Not every lender is wanting cannabis on their books. I'm kind of curious if you could speak a little bit to that, as far as just the opportunities for cannabis businesses. Are they is getting a loan at a in a regular thrift, is that an opportunity? Or are they more looking for something like what you have available?
Traditional sources of capital for real estate are not available to the industry. And it's what makes this investment so attractive for us. It's playing this disconnect between federal and state law, right? It's illegal at the federal level, but yet it's legal in 35 to 37 states from a medicinal perspective, and well over 10 states from the recreational coast. It's about 15 states from the recreational perspective. And so what does that really mean in practice? If you look at most loan documents, there is an innocuous clause that says that you will not lease any properties you own to a tenant that is in violation of law. And we all execute transactions and you see that covenant. You say, yeah, of course. But actually, if you have debt in your real estate business, you can't take a tenant that's in cannabis without being in violation of that clause. And we have seen time and again over the last 3 years and a few years before I even got into the business, there are many, many stories where a real estate owner would lease to a cannabis company. They'd submit the tenant information to their lender, and the lender would say, you have 30 days to get rid of this tenant or your debt is being called because you're in violation. And so it really is a no-fly zone from the major banks. Now, there are some small banks that may lend against these assets, regional banks. Since they're smaller state chartered banks, they tend to have some legal lending limits, so you can't get large transactions funded there. And we're starting to see some of the mid-sized banks maybe nip around the edges, but by and large, there just isn't the type of real estate capital available to this sector because of that federally legal classification.
No.
Excuse me.
No, I would say even I know like insurance, we face kind of the same thing. That's, different carriers are willing to, look, I don't say look the other way, but they recognize the state law, and they'll put an exclusion on the policy with respects to any kind of a cannabis related claim. But by and large, I think more of your name brand carriers, it's a flat out no, and they don't want to have anything to do with it. So you're second tier. I don't want to say second tier. It's just a different. It's the excess and surplus lines carrier, which is more designed to carry the risk that the standard carriers are not. So it is interesting how the. Go ahead.
It's also a hard asset class for traditional banks and even many traditional real estate lenders to understand and get comfortable with. And it's because it's so highly specialized, and the rules and the regulations are different state to state, county to county, and town to town. And the setbacks may be set up different. The rules and the compliance regulations may be set up different. And really the best correlate I could give would be data centers from the late 90s, early 2000s, or even lab space back in the early days. These were subsectors of commercial real estate that require investment. This is particularly on the industrial or cultivation side of our business. They require investment that is different than you would see in any other commercial real estate transaction. These facilities need water, power, and security well above what you would have for a traditional alternative use, industrial use for one of these properties. And so understanding the demand for that type of asset once it's built, your ability to backfill the tenant should you have any issues, the risk you're taking, and the over investment you're making relative to alternative use requires you to have a deep understanding of the industry to really understand that risk profile that you were just referring to.
Yeah. So let me ask you, so as a REIT, are you guys raising capital for like a down payment, or are you raising capital for the entire purchase?
We raise capital for the entire purchase, and we have now, as a company, raised over $400 million in the last 2.5 to 3 years. We recently completed our IPO in August. NewLake's ticker symbol is NLCP. We merged in March with a like-kind REIT, a like-sized REIT, like-minded REIT. We put our two businesses together in order to have the scale to take the company public, and we raised $100 million in August. And so, as I said earlier, we own 27 properties across 10 states with 8 different tenants. We are, the second largest in the country in terms of cannabis property ownership.
So that just by nature, you have eliminated any of the lender kind of risk as far as anybody else that was trying to buy and have cannabis tenants in the as a tenant there, which that's great. I mean, I think that makes complete sense. It's a great opportunity. So without any lenders involved, then, and you've got the tenant as the operator, the occupant. They're in charge of paying you your rent, taxes, insurance, maintenance. Is it basically just a factor of a return based on acquisition price, rent, I mean, what kind of returns are you able to? What kind of returns are you seeing with your REIT?
Yeah, essentially, yes. We are unlevered today. When we did our IPO, we disclosed that our top line yield, our gross yield, is 12.4%. We do get annual escalators on our leases. We have a weighted average remaining lease term of over 14 years, and annually our leases escalate at 2.5% across the portfolio. And so not too bad when your top line is over 12.4%, growing 2.5% a year with an average life of over 14 years. So we think there's tremendous value there. And again, similar to what we've seen in other subsectors of commercial real estate, like the data centers and lab space, these cap rates tend to be higher. But then as the industries become more understood, the pricing comes down. We are an internally managed REIT, not external, so we're internally managed. So our shareholders will benefit with scale. We get a lot of operational leverage out of our expense base today as we add properties. Because this is triple net, we don't have to have some corresponding growth in headcount to manage the properties. So we think we can continue to scale the company, acquire properties, add yield to the top line with very minimal increase in the expense number. And ultimately, we will be able to get leverage. And to be clear, leverage for us and for a couple of our professionally managed peers is available from an institutional perspective. And there's even a bank or two that we're talking to that would be able to lend to us on a portfolio basis. So there is some leverage available to us, and we'll do that at some point in time in our future to further enhance the yield and to optimize the balance sheet. But the opportunity for us to be able to do that is really, let me say that differently. That opportunity to lever a portfolio of commercial real estate is really only for those well professionally managed groups, by and large. Can you find somebody here and there that's been able to get a local bank to provide leverage on a property that they decided to keep and lease to somebody in the cannabis sector? For sure, you could find those one-offs. But on a portfolio basis, there's very few of us that have been in the business now for a few years and can garner the confidence to attract institutional investors or some of those banks. So we'll put leverage on at some point in the future.
Oh, that sounds great, especially like you said, as you're larger, more professionally, or just the portfolio size of, I could see a lender, institutional lender, being very attracted to that. As far as, and again, a REIT, just to clarify for listeners, in that your public investors are able to invest and exit like a stock. Is that right, or is that?
Yes, we are a real estate investment trust. We are required under statute to distribute most of our earnings. And so we're more of a dividend yield play and listed on the OTC. We have stock sales and purchases happening every single day. So it's not a private REIT. This is a publicly traded company. Just the way you would buy or sell Prologis, you can buy and sell New Lake Capital Partners, ticker NLCP.
Got it. And then, one of the attractions for a lot of real estate investors to real estate is, you have some additional opportunities to offset your expenses, with depreciation and interest write-off. Is that blended into your return at the retail level, or I'm assuming an investor wouldn't necessarily see that directly? It'd be more of an indirect part of the return. Is that?
That's correct. The investor does not get the depreciation that they're going to take on their balance sheet. That flows really through the structure of the REIT, and then through the dividends and what we're able to pay out, and not be taxed at the corporate level, right? As long as we're meeting our REIT requirements, all of our distributions are tax-free at our level. I would have to tell your listeners that they need to check with their own tax accountants. There are some advantages to receiving REIT income depending on one's personal tax situation. And you could be eligible for a 20% tax on our dividend, but that is an investor by investor analysis that they'll need to talk to their own preparer about.
Gotcha. And as far as the qualifications to be an investor, is there any requirement to be accredited, or is it just like I said, it's over the counter? You can.
Yeah, again, as a public company, just like Prologis, you can buy 3 shares if you'd like. There's no minimum. It's not like a private transaction where you need a minimum of $200,000 or $250,000. You need a brokerage account. You need a brokerage account that'll transact in cannabis.
Gotcha. And then as far as the different types of tenants, you've mentioned you have 8 tenants, 10 different states. And is it everything from growing to the retail and everywhere in between, or?
Yes, within our portfolio, we have 11 cultivation facilities and 17 dispensaries. Dispensaries are retail locations. That actually adds up to 28 because we also have a loan. The way the loan was structured on that cultivation facility is to convert into a sale leaseback, so we don't technically own the building yet. That's why I say 27 properties. And so, yes, we do have cultivation. They tend to be indoor facilities. We don't have farms. We don't do land deals. We don't do large outdoor farms. We will do true what's called industrial grow or indoor grow. And then we will do greenhouses, but these aren't greenhouses that you would see at your local nursery. These are high-tech greenhouses that will control humidity, they'll control temperature, they'll control lighting. So with light deprivation screens that can automatically open and close as the cultivator thinks the plants need to adjust either the lighting or humidity or automated irrigation systems. So they're pretty high-tech greenhouses. And then on the dispensary side, these are retail locations, and depending on where your listeners are sitting, many of them have probably driven past them in the last week or two. These are traditional retail locations, and we have 17 of those properties. We like the mix of having retail and industrial within our portfolio. We know that our tenants like that we can serve all of their real estate needs across the retail and the industrial needs.
No, I would think that's, having that relationship and being able to go, from top to bottom or whatever your next venture is. Because a lot of these, I believe, do migrate from one aspect to another based on the opportunity. As far as the underwriting of the tenants or the borrowers or I guess it's more of a tenant for you. Is there any level of scrutiny that you I mean, how do you discern this? Because a lot of it's a fairly new business. I mean, there are some larger operators, which it sounds like maybe that's where you have focused. But I'm just kind of curious, based on, I know, like here in Oregon, there's just been based on the state laws and the inability to move product across state lines, there was somewhat of a I don't want to say glut, but I know there was a lot of product there for a while, and I think maybe a lot of that's been absorbed in the pandemic based on people's
some
use
of
habits.
it's been absorbed. A lot of it's made its way to other states illegally. They call it Croptober in the industry, and it's been a real issue coming out of Oregon. And I'll get to your risk question and how we underwrite, but your commentary about Oregon brings us back to this limited license state focus that we have. We actually call it a jurisdiction because it's not always states. A state like Oregon has been prolific in the way it hands out licenses. And that has indeed created a glut of production for cannabis and for dispensing. And it has upended the economics of the business, which means that you had all of this product, you didn't have enough demand to meet the product, so prices decreased rapidly. So good for the consumer, but people couldn't make money at those depressed prices, right? Their fixed costs, the average cost to generate a pound of marijuana may have been, say, $1,200, and it was selling at $800. And so people were underwater, and what were they doing? They were taking it across the state lines. They were traveling out to Michigan. A lot of marijuana ended up in Michigan and in other states. And so there's a lot of illegal activity. And it was very difficult for people to be able to make money. And that has played itself out again in other states. If you look at Oklahoma today, Oklahoma is now the new poster child for this dynamic. Whereas if you look at a state like New York, New York has only 10 licensees. So it's a very controlled environment. And they've been able to really maintain more discipline in the market. Now, some would say consumers are harmed because the price of cannabis here or in New York is anywhere from $3,000 to $4,000 a pound. And so, boy, it's so much more expensive for them. But I'd argue that there's probably less illegal activity with product going out the back door. And so there's probably some equilibrium between the two. To the point about risk management, though, the reason I go into that is those are dynamics that are critical to making these long-term investment decisions. And when I first started talking with my friend back in 2018 about the business, once I saw the investment opportunity, I quickly realized and said to him, we don't have the expertise to truly understand this business. We need to understand it. And so we partner with and have on our board a gentleman by the name of Pete Cadens. Pete was one of the founders of a cannabis company called Green Thumb Industries, or GTI. He's one of the co-founders, was the CEO of the company for 5 years, took it public, and then retired after he took it public. And so his knowledge of the sector was invaluable to us when we were getting started. And what we've done is we've taken that knowledge and we've institutionalized it across our entire team, not only our investment team, but our entire team and our board. And we've used that knowledge to really get smart on how can we make the right investment decisions. And then let me tie that into what our underwriting process is. We look at four things primarily. Number one, we look at the diversification that any investment will provide to us. We like geographic diversification. We like tenant diversification. We like use type diversification, retail versus industrial. We also look, as you would expect, at the company, right? We understand all the traditional metrics you would look at from a balance sheet perspective. But importantly, in this industry, we spend a lot of time evaluating the company's ability to raise capital. And the reason is because we understand that this industry, companies in this industry have a voracious appetite for capital. And it's important to know that the management team has the ability to continually raise capital and stay ahead of its growth aspirations, or it can adequately balance its growth with its capital availability. And quite frankly, if you look at a lot of the missteps in the cannabis industry, it's been because they've run out of runway. Not that they didn't have a good business plan, they just ran out of runway, didn't have the ability to raise capital. The third thing we look at is the property. Of course, it's a real estate business. We understand the property, its alternative use value, but very importantly, we understand its value in the cannabis ecosystem. So let's take your state. You're in Oregon. What will somebody pay for a cultivation facility in Oregon where there's probably over 1,000 cultivation locations in Oregon? There's nothing special. Or a retail location where there's over 1,000. There's nothing special with any one of those. But now let's go to a state like Pennsylvania, where when we did our first transaction, only 26 licensees. Well, that limited license state where the license itself is selling for, could be 25, could be 50 million just for the license.
Wow.
You could see how that intrinsic value creates a lot of value for us as a property. So we would understand that in Pennsylvania, if that tenant experiences difficulty, number one, they're likely to monetize the pure license value and we'll find a better credit stepping in. Or number two, if they don't, there's now a licensed location that somebody else can step into. So we know that the remarketing of that property would be much more easier versus another location. So I don't want to go too far into that, simply to say understanding the property is critically important in this industry and its pace in the ecosystem. And then the last place is that jurisdiction of value. The last element I said there's four. The fourth one is the jurisdiction. So understanding what is the licensing regime like? Will there be a slew of licenses coming out? You could look at Massachusetts and say, well, Massachusetts, there's no limit on licenses. The state could issue as many as they want. Yes, however, it operates as a limited license state because each jurisdiction has where the location, where the property is, has to have what's called an HCA, host community agreement. So that particular limitation makes the state almost behave like a limited license state. So that's a bit of how we focus on underwriting. It's about the diversification the transaction gives us. It's about the quality of the company, importantly, their ability to continue to raise capital to fuel their business. It's about the property and its situation in the cannabis ecosystem, not just the overall commercial real estate ecosystem. And then importantly, understanding the dynamics of that jurisdiction. there's a lot that goes into it and a lot of specialized cannabis knowledge to try to be successful.
Yeah, no, I appreciate you going into that, the supply demand thing, the licenses. If everybody has one, they're not worth anything. But when you have a few, it makes complete sense, and there's got to be some sort of balance in there. But yeah, it was a sad thing to see, all the excitement in the cannabis in the early stages, and then it just, they over licensed, and some of the people clearly didn't make it here in Oregon based on just oversupply. But I wanted to talk just a little bit then about the legal climate. So obviously, Oregon has both medicinal and recreational. I think you said there are like 35 states that have medicinal and 10 to 15 with the recreational. Do you see anything coming, or is there anything that you are anticipating that would change at a federal level as far as the laws? And if so, how does that play into your investment strategy, or does it?
Oh, it absolutely does. And to set the stage for this conversation, let's talk first about the polling on cannabis. And there's a Pew Research poll. There's a number of other polls that have been done in the last few years. For medical cannabis, it consistently polls well above 80%, and I've seen polls in the 90% approval for medical cannabis. So even the lowest poll I've seen was well north of 80%. So I think as a country, the country is generally comfortable with medical cannabis. On the recreational side, most of those polls are now consistently polling above 60%, 62%, 66%. There are not many things in this country at this moment in time that the electorate agrees on greater than 50%. And so I think it's important to understand that societally, the backdrop for legalization is there. Right? There is no anti-movement that has enough support that will keep it from happening. The people want it. I honestly believe it is inevitable. It will ultimately happen. But then that fact, or those facts, meet the reality of Washington, D.C. And so it's not just about popular support in Washington, D.C. to get something done. It's political will. And there are a lot of politics at play in this particular topic. There is, to be sure, there actually is meaningful bipartisan support in Congress, as demonstrated in voting on the floor. And in fact, Congress has passed what's called the Safe Banking Bill numerous times on a bipartisan basis and sent it to the Senate. It's not been taken up in the Senate, either in this Senate or in the previous Senate. In fact, the Safe Banking Bill was worked into the recent National Defense Authorization Act and was stripped out last week in the Senate. Congress was trying to get it done through the must-pass national bill. There have been other legalization bills that have come to the fore, whether it be States Act or MORE Act. Notably, there was a bill that was proposed in Congress by a Republican a couple of weeks ago, just prior to Thanksgiving. And so I do believe there's bipartisan support for legalization, but where it becomes difficult is there is a wing of Congress that believes that any legalization of cannabis should come with it a significant amount of social justice reform. And that's where I think the legislation starts to become a little too much for the conservatives. Some of these social justice agenda items, I think, just make it a little bit more difficult. Safe banking, I think most people, if it had a floor vote, if it got a vote in the Senate, I think it would probably pass on a standalone basis. Senators, just a little bit of the politics here, Senators Schumer, Booker, and Wyden all are about to propose comprehensive cannabis reform. They put out a draft this past summer and asked for comments. They didn't propose it as a formal bill. And so what the three of them have said is that they don't want incremental reform before they get the totality of a wholesome reform package. And so that's why SAFE isn't going anywhere right now. And then the question will be, can that proposal get enough Republican votes to support it, given its social justice components? So without going into those pieces, that's a bit of the dynamics at play. It will happen. It's just a question of when. But I do think we have the opportunity to get a banking bill, safe banking, done before we get comprehensive federal reform done, and could be as soon as next year.
Do you see any of those changes then changing your situation as far as a strategy, or do you feel like having been kind of getting in the front of the line and creating a place that you'll always have an opportunity in this space?
We're actually very excited for federal legalization, for safe banking, federal legalization. Think of this from a safe banking perspective. First and foremost, it will allow our tenants to accept credit cards. It's mostly a cash business today. And so I've seen estimates, most of them center around 10%. I've seen estimates that revenues will go up as much as 20% once credit cards can be accepted. So you just think about that, right? You have an additional 10 to 20% of revenue. Most of it's dropping to the bottom line. From a credit perspective, all of our tenants become much better credits. From a banking perspective, people say, oh, then the banks will get in. Again, this is a highly specialized area of real estate investment. And what we end up doing is we end up providing a meaningful amount of tenant improvement dollars to the tenants to complete the build out of the industrial or the retail location. So yes, for sure, banks will step in, but they will step in by lending 60 to 80% LTV on a non-cannabis value. And it really will limit the amount of proceeds available to people. I think in some instances that'll work, but it's not going to happen right away. Built into the safe banking bill is a 6-month rulemaking period for federal banking regulators to write the rules. And so just think about this, having been in banking for most of my career, a multi-jurisdictional federal regulatory meeting takes months to schedule, let alone agree on what it will be. And you're now writing rules for banks that may operate in every state or in multiple states. And some of the states they operate in, it's legal. In some states, it's not legal. And so from a compliance perspective, it is a very complex set of rules. And in fact, hemp, which is the sister to marijuana, hemp was legalized in 2018 under the Farm Bill. We're still getting some of the rules. Earlier this year, there were rules coming out about banking around hemp. And so it just demonstrates this point that banks won't move until the rules are set, and it will take a while for the rules to be set. Yeah. And then you could do a follow-up, and then I could talk about federal legalization because there's some other dynamics at play for us there.
Yeah, please do the federal legalization. Please do.
Yeah, on the federal side, once there is federal legalization, it will usher in a period of massive growth and massive investment. And so a group like us that has a first mover advantage, that has the relationship, we have a database of well over 100, even though we only have 8 in our portfolio right now. We have relationships, having been there as a consistent source of dialogue and capital for the last 2+, almost 3 years. We're building up those relationships, and we will be there to provide the capital the industry will need as soon as that legalization is looking like it will come, because it's not going to happen overnight. We're going to see it occur. We're going to see the bill work its way through. We're going to sense the momentum. We're going to have the sense of confidence, and the industry will be investing ahead of that. We'll be able to provide that for them. And then upon legalization, we'll be able to continue to provide them capital using our first mover advantage and industry knowledge and relationships. So we think that's a massive growth opportunity for our business.
No, it sounds like it is. And again, being the expert in the field and being one of the first and a very recognized specialist, and even like you said, some of the lending criteria that the lenders wouldn't necessarily lend on the business, but just on the real estate thing would totally make it a different fit for
right.
the tenants and that. So that's great.
Let me give you a risk, if I may, Darren.
Sure.
So the risk there is some of your folks who are listening might know a little bit about the business and say, wait a minute, right now, since you can't transport across state lines, you have cultivation facilities in all these different states. Anthony, you own a cultivation facility in Pennsylvania and in Massachusetts. And once legalization happens and interstate commerce is allowed, are you going to have cultivation facilities that are going to be completely useless in Massachusetts and Pennsylvania, and all the cultivation will happen in California or Nevada, and it'll be transported around? We look at that all the time. we like to know, A, that there's strong alternative uses for the properties we get into in case we get it wrong. But importantly, we think the properties that we own are have durability even in a world where you have federal legalization. We also get parent guarantees in our transactions. So if a company decides they want to shut down their facility and move it elsewhere, they have to continue to pay us rent. But back to my point, I think most importantly, back to my point about ushering in a period of massive growth, a company, given the sizable investment in a cultivation facility, which could be 10, 20, 50, $70 million, they're not likely to just walk away from that infrastructure and their people. So I think most of the new capacity would then be brought online under federal legalization in another locale. But I think just like we're seeing in other consumable product sectors, having some connectivity to the community and local production is an important component of their overall infrastructure. So we like the durability of our assets, even after federal legalization and interstate commerce.
No, absolutely. If there's anything that COVID, the pandemic's taught us is the supply chain bottlenecks, that can occur. And I would think that just the mindset of anybody that's in manufacturing or production, recognizing they have, there's something, I don't know, Tim Ferriss, something like it. If you have two, you have one. So, or, if you have one, you have none. So there's some sort of like a having more options and wider distribution. Yeah, definitely a better way to go. Anthony, if we could, I'd like to shift gears here for a second. We've been talking quite a bit about risk, but there's a question I like to ask all my guests. And it's based on the fact that by day I'm an insurance broker and work with my clients to assess risk and determine what to do with the risk. And there's three strategies we typically consider. We first look to see if there's a way to avoid the risk. When that's not an option, we look to see if there's a way to minimize the risk. And then if we cannot avoid nor minimize the risk, then we look to see if we can transfer the risk. And I like to ask my guest if they can take a look at their own situation. Could be your clients, investors, the tenants, jurists, or the laws, however it may be. But if you can take a look at your situation and identify what you consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance-related answer. Mm-hmm. And so if you're willing, I'd like to ask you, Anthony Coniglio, what is the biggest risk?
Yeah, the risk I worry about most right now is, and I worry about everything. And my team, if they were here, our team would laugh right now because they'd be nodding their head saying, "Yes, he worries about everything." What I worry about most right now is the federal legalization's impact on our tenants. I keep telling people in the industry, be careful what you wish for. You all want federal legalization, but it will not come in the form of, okay, it's legal, keep doing what you're doing. It will come with massive regulation. And so I look at, for our tenants, how will they be able to manage through that massive regulation? Are they doing what they need to do to get through the FDA, right? Because these are consumable products. Are they doing what they need to do to avoid issues around branding and how they're communicating with people and some of the restrictions about how you will communicate around this product? And so I spend a lot of time trying to make sure that we really understand not just if federal legalization will happen, but how does it happen? What will the regulatory impacts be on the industry? And are our tenants and our prospective tenants really having the capability to navigate what's likely to come at them? Because I think many people in the industry underestimate the amount of regulatory burden that will be hoisted upon this industry upon legalization. And so, it's interesting. You said avoid, minimize, and transfer. I'm not sure how we do any of those with that particular risk. But that's where I spend a lot of time worrying about. And maybe that's why I worry, because I can't avoid, minimize, or transfer it.
Well, right. But I think that even in that case, trying to think ahead and to even to have the mindset of this, the changes are going to come. I think like you alluded to that a lot of times we think, oh, if only this, then everything would be great, but not recognizing the wave of different set of circumstances that come with that, whether there be more competition, more red tape, whatever that may be, that you hadn't anticipated because you thought everything was going to work just the way it was, only now it's going to be better. And I think that, one of the driving forces in the American economy is disruption and change. And it's always amused me because I think that from a consumer standpoint, most of us want something we can count on. We know that this will be this and that will be that, and we can count on that. But the real opportunity for the dynamic marketplace is the up and the down, and recognizing the opportunity in the down and recognizing the opportunity to get out of the up. And, and that's really what keeps it a very dynamic marketplace. Although it's a tough thing to accept when it's you that are, in the firing line, but, or in the line of fire, but it is something that you have to, I think, you have to appreciate that is one of the things that makes a vibrant marketplace in the United States and continues to do that, and then worldwide as well. But it is something.
I totally agree. There's that famous saying, the only constant is change.
Right.
And so we have to expect it, and we have to plan for it, and we have to manage our businesses knowing that change will happen. We won't always be able to anticipate where that change will come.
No, well said. Hey, Anthony, where can the listeners go if they would like to learn more or connect with you?
Our website is newlake.com, www.newlake.com. On that website, you'll see some information about us. Importantly, there's an investor page. As a public company, we have an investor page. Folks can feel free to peruse around that, look at a recent investor presentation, as well as links to all of our SEC filings.
Awesome. Anthony, I can't say thanks enough for taking the time to talk. I've enjoyed our talk. I've learned a lot, and look forward to doing it again soon.
Darren, it was a lot of fun. I really appreciate you having me. And yes, would love to do it again soon.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CRE PN Radio.